Hey guys, Boris Lasser for VK Forex. Welcome to our daily technicals. EURUSD PMI sends a signal for 321.13. As always, past performance not indicative of future results. Trading Forex carries high low risk may not be suitable for all investors. High degree of leverage can work against you as well as for you. Before deciding to trade any such leverage products, you should carefully consider your investment objectives, level of experience, and risk appetite. Possibility exists that you could sustain the loss of some of your initial investment, and therefore you should not invest money you cannot afford to lose. You should be aware of all the risks associated with trading on the margin and seek advice from an independent financial advisor if you have any doubts. The information, including commentary trade ideas provided by bkforex.com, should not be relied upon as substitutes for extensive independent research, which should be performed before making investment decisions. Information and opinions presented here do not take into account any particular individual investment objectives, financial situation, or needs. All investors should obtain advice based upon their own unique situation before making investment decisions. We're not responsible for any loss incurred by readers or clients as a result of any information contained here. We do not render investment, legal, tax, or other professional advice. If such advice is needed, please seek advice of a competent professional. So Euro obviously sort of center stage, still trying to consolidate here after the Cypriot e-resolution. We definitely held the 29.50 a couple of times here. That seems to be relatively strong support. But this 29, basically a 130.100 has become a pretty stiff resistance for the euro. And in order for it to kind of reestablish its more or less modestly positive bias, it needs to retake this, especially because, as you can see, this is already the third day in a row that the downward gap that we opened up on Monday has not been filled. Now, a fill of this gap would be relatively positive in the sense that it would kind of neutralize the longer-term negative bias. The longer this gap stays unfilled, the more negative it is. And I think from a technical point of view, if you have following kind of a scenario today where you have the unfilled gap and a failure here to kind of rise above to 30, as a matter of fact, a turn back and a break of the 29.50s, that's going to be an absolutely really critical thing here. The 29, not necessarily the 29.50s, it should be really more of a break around 29.40s, which is where the true lows lie. That would create a much more negative picture because you would have an unfilled opening gap and fresh lows, which then could probably target 2800, maybe even 2750 on a longer term basis. On a longer term basis, you can see that the real long term support here, I think, when you look at it longer, is around 2659. So that's around, that's so clearly 300 points away, but this is what this kind of a unfilled opening gap could open up as a potential. So we are definitely, even you can see this even on a daily basis, we are definitely stabilizing. There's definitely support here, 2850, 2900, and therefore any kind of a short-term trade is going to run into that support. But a break of this support here definitely open up a much more ominous negative trade. On the other hand, if this thing can just sort of consolidate, hold ground, and then resuscitate and come back up to retest the 30s, that would create a little bit more of a positive structure. The move to the 30s still faces a very stiff resistance at 30.50, but at least I think a move through the 30s would give a reasonable chance of refilling this gap through 30.50. So a move onto 30 probably would give us more momentum for at least the next 50 points to take out a 30.50 move, which is generally what's going to, generally what happens when you try to fill out the gaps. So we'll see how it goes. The euro definitely sort of at a critical juncture here, either one way or the other. Yen, on the other hand, of course, looks much more constructive. There's a lot of talk now. Yen, of course, filled its gap way early on Monday, had a nice big move to the 96s, kind of stalled 96s here. We talked about the fact that when it took out 95.50, the move towards 9600 was going to be relatively smooth, and it is exactly what happened. The critical thing, of course, the yen is this massive overhead of 96.70. That may take more momentum to really clear, but if it does clear 96.70, there's a tremendous amount of conventional wisdom now that a move through those levels really could take us to 98s and then ultimately 100 on a very longer term basis. Certainly, if you take out the new highs, if you look at the daily, if you take out the new highs, there's nothing here as an overhead resistance. So you can see why so many people are focused on the idea of if it can take out new highs, it starts to squeeze higher. So we'll see how that develops. But yen definitely looks a lot more constructive in the near term. Certainly, as long as it holds 95.50 support now, which was the former resistance, now becomes support, consolidates. If it breaks into the 9600s, obviously the next target will be 96.50 before the all-time high, not before the weekly, before the yearly highs come into play. Pound is just oscillating. It's really amazing how pound has just completely oscillated around this 51 level, which has become kind of the new equilibrium. Having said this, though, yesterday's very topsy-turvy price action resolved in some ways to the positive side, in the sense that you had a test of the ups, test of the downs, and then a settlement somewhere in the middle, which suggested the bottom really found a lot of value proposition. The cable, if you look at it on a daily basis, really doesn't look like it's a buy with conviction until we can clear the highs here, which is 51.85. Ironically enough, it is also, of course, the very, very stiff resistance here on a longer term basis of 52s. So it's really sort of a clear of 52s that may take us then finally through this very, very stiff wall of resistance over into recovery 53s, into the 53 land. Until then, it definitely looks like it's caught up in a resistance wall, and therefore any kind of a run here is definitely going to run into resistance at the 5200. But a move through 5200 really does open up a run towards the 5300s. So in many ways, that's kind of an interesting look for the rest of the day. And Aussie is just doing nothing. It's really interesting how it's just completely died here for the last several days. The 30-50 104 level is just become the new range. Very, very tight volatility. One of the key things about when you have such tight volatilities is that the resolution of this range, whether it takes out the 104.10s or it breaks down the 103.50s, tends to give you a pretty good directional signal. So if we break out the 104s, the probability to go to 104.50s increases quite a lot. And conversely, if we break down the 103.50s, the possibility we drift back down to 103s increases quite a lot. And that's what you see here in the market is a kind of a quiet indecision until we try to figure out which way the directionality wants to take us, which is in many ways, I think, emblematic of a lot of stuff that's going on in the market for right now, in terms of everybody watching key levels and the key support levels to see if they hold a break as we go into the day. We'll see how it shapes up. I'm wishing you guys the best of luck and the best of trading. This is Boris Schlossberg, over and out.